Good morning slash afternoon, everyone. Thank you guys in advance for joining us today. I appreciate you coming to join this slightly delayed monthly webinar series. So now we've kind of put ourselves in the middle of the following month, but we, you know, obviously want to deliver something exciting, and we also want to deliver new material as it comes up our way for you. For those of you who have not met me, my name is Matt Waxman, and I am the now newly promoted AVP of Sales and Marketing for Alchemy Insurance Solutions. Um, I am your host for these webinar series, and every month that we do them, we try to cover a different topic and try to feature someone, at least within our organization, if not outside of our organization, who has a certain level of expertise in the field and can go ahead and speak to things. Today, we're going to focus our webinar series, and this month we're going to focus our webinar series on something we're extremely excited and passionate about, myself included, as I do a lot of work within the builder's risk sphere here. We have recently launched a new excess and surplus lines builder's risk program. It exists inside the current quoting space for the national program, and it's just providing extra capability for all of you that are currently appointed. If you're on this call and you're not currently appointed with us, please feel free to reach out. We can send you the link. Also, we'll have a QR code towards the end of the presentation where you can go ahead and sign up to get appointed with us. That'll give you access to any and all of the programs that Alchemy offers. If you have any questions or want to know more, we do have a website that you can check out as well. It is Alchemy INS, as in the first three letters of insurance.com. So feel free to go ahead and check that out, learn about the programs that we offer, and I'll try and touch on some of the things that we're currently in development on, or perhaps I'll let Brian Adams, who will also be on this call, go into some of those things that we currently have in development as well. Give you guys a quick rundown of what we want to talk about in today's webinar. We're going to go over just a quick welcome like I already did. I'm going to let Brian Adams introduce himself as well as another presenter. We're going to go over excess and surplus lines in general. We're going to talk about our excess and surplus lines program. We're going to spotlight a couple things, and then we're going to actually skip that whole system demo thing. It's not very exciting anyway. It's the same system that those of you who are already appointed in are currently operating in, and then we'll open up the floor to additional questions and answers. We do have a Q&A chat that is live in the webinar. We do this every single month. If you guys are unfamiliar with it, in the top you should see a Q&A option. If you click that Q&A option, you can enter any questions that you have there, and anyone on my team who is on the webinar can go ahead and answer those questions for you in real time. If not, you can put your questions in there. We can always hold them for the live Q&A at the end. I will try to unmic people as they have questions when we get to live Q&A. Sometimes it works, sometimes it doesn't. Again, thank you all for attending. My name is Matt Waxman. I am the AVP of Sales and Marketing here at Alchemy Insurance Solutions. I also see this slide as blurry on my side, so I hope you don't see it as blurry on yours. I'm not sure what happened there.
I see it as
And I'm
good,
gonna,
man.
it's good? Okay, perfect. And maybe it's just my eyes. Too much time on the computer screen. And I'm gonna let Brian Adams go ahead and introduce himself really briefly, and then I'll go ahead and take it from there.
Good morning, afternoon, everybody, wherever you're at. Brian Adams, AVP of Property Underwriting. You'll see my alter ego there without the beard. So it's picture was taken probably 2 years ago at this point. So don't be surprised to see a different person here. Been with Alchemy for going on 2 years now. Within Alchemy, my role has been product and underwriting, developing the builder's risk product. Have a couple of products that we're bringing on board as well that we can certainly talk about at the end. But bringing on the program to expand capacity for all the agents within the agents that are appointed with us. So we have coastal, 50 state admitted, and what we're talking about today, the 50 state E&S. So my job has really been to expand that program along. I'm going to continue to expand that program to bring other offerings. And so, but any builder's risk questions, I'm the subject matter expert. So I should be able to answer anything that you have today. One thing that we'll probably point out down the road is, and if you've heard from me before, is our access to our underwriting. So we have an underwriting team. I'm here if you need me. We certainly have direct access to our underwriters, which we try to separate ourselves out from the other carriers and offerings out there with that access to the underwriting team. So welcome aboard. Look forward to speaking with you guys all. Like Matt said, there's the Q&A. We'll try to answer those as we go. And then, I see some questions already. So with that, I'll turn it back over to Matt and we'll get going.
Thank you so much, Brian. I appreciate it. Thank you for doing the intro. Guys, I don't know if Brian mentioned this or not. He's also newly promoted and he is now our AVP of property underwriting. So I feel like that's an important shout out. Brian is an integral member of this team who adds tremendous depth to what we do and what we offer. So another big congratulations to him on that as we continue to grow, obviously being able to promote the individuals who are the driving force behind that growth. To start things off, I wanted to just give a brief overview on the state of the construction insurance market in the United States. Obviously, we all know that, there's been market tumult here and there. There's been, some tariffs lodged, some tariffs postponed, and it's caused a little bit of like a gun shy nature in new home, purchases and things like that. So I wanted to talk just briefly about the market itself. So believe it or not, even though we kind of get this media projection of gloom and doom, it is not a gloom and doom market at all. The market is actually projected to reach 2.52 trillion by 2030. There is steady growth within the market of about 2.8% predicted over the next 5 years as well. And just to kind of look at the current view of 2025, there are a lot of pros. And then, of course, some little cautionary items. So one of the things I want to point out is that there is still a steady demand for housing. It doesn't apply to necessarily all 50 states, but there are certainly some high growth states out there. Those would be like North Carolina, Texas, Florida, and there's Ohio is one of them. There are like 10 states that are really surging in demand when it comes to residential construction. And so we start to see more and more of those residential constructions increase. For myself, I'm based out of Tampa, Florida. Tampa, Florida is in a housing crisis. So even though you might hear on the news like, oh, homes are sitting on the market longer and blah, 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 all these things, the level of construction, both residential and commercial here, is astounding. You cannot go anywhere without seeing cranes or new construction builds or townhouses or large condo complexes or apartment developments. And these large growth states are definitely seeing that. So there is still a very steady demand for new builds on the residential side, is of course. And then I guess we're seeing some increased governmental infrastructure funding, which is helping to feed some of the commercial side of things as well. The only caution flags that they're throwing up right now is the volatile economic conditions, right? So we have a situation currently where we've got some tariffs going on. It's causing an increase in build prices. It's causing an increase in most material costs when it comes to things, which means that the cost to build goes up. And with the cost to build going up, obviously the cost to buy goes up. We're also still looking at fairly high interest rates. Now, they're not where they were historically high, but they're certainly not in those COVID lows either. So with that being said, people get a little more gun shy, though I'm hearing that there is good news that we potentially are looking at a situation where interest rates will start to come down. And once they do, we expect that, new home sales will start to surge and building will continue to increase as that goes. Deeper into residential and commercial construction, right? The residential sector is projected to return to growth mode to the end of 2025. So again, some of that is going to hedge on where we are with the build costs, and some of it is going to hedge on to where we are with interest rates. So if interest rates do drop, we certainly expect that the residential sector will continue to grow. And the forecast for growth on that is somewhere between 6.7 and 12% when it comes to increase in new starts. For the commercial sector, it's actually seen a little bit of a downturn, and the downturn primarily is on builds within the manufacturing sector. And that, I think, to some extent is governmentally driven. But what we are seeing, which is kind of exciting on the commercial side, is that the commercial builds of retail and office spaces, as well as institutional projects, have started to grow. So even though we're seeing a slight decrease in the new starts on commercial side, the types of new starts on commercial are looking promising. So I wanted to make sure I put that out for you guys because, again, the media puts out one thing. It's not always the same gloom and doom story. Talking a little bit about excess and surplus lines. Now, I don't know how many of you aren't licensed for excess surplus. I don't know how many states you have licenses for excess and surplus in either. But I wanted to talk just briefly as excess and surplus lines is starting to grow in favor. a little bit about excess and surplus lines themselves. So excess and surplus is there essentially when a standard insurer is not going to cover something that is unusual or high risk in nature. Excess and surplus steps in to kind of give you that option for placing that property or casualty. So a lot of you guys, if you're unfamiliar with it, think of like Lloyd's of London. Most of the time, a Lloyd's of London product is going to go ahead and be that excess and surplus lines product. It's not your standard admitted market, but it does provide you access to place risks that are unconventional or high risk. E&S is a growing market space. I cannot stress this enough. Again, Florida based, so I am partial to it. E&S is something we talk about fairly regularly over here. Florida is actually the #2 state for excess and surplus lines at the moment. #1 actually being California. So my California people on this call, I know you're no stranger to excess and surplus lines at this point. We are both in very difficult property markets when it comes to high loss states. And when you have high property losses, admitted carriers tend to pull back on programs, or carriers tend to exit the state when they can't get the rates that they need because those admitted programs are all filed and increases all have to be supported. And so you see these carriers pulling out of these difficult property markets. Excess and surplus is there to step things up. Now, each state has their own governing body for excess and surplus, the same as they do for, Department of Insurance, and they work hand in hand. I actually just went to the Florida excess and surplus meeting a little while ago, and they talked about the fact that while the growth of excess and surplus has been slowing over the last year, it is still growing. It is not growing at the percent that it was 3 or 4 years ago when we had all the hurricanes and we had homeowners markets pulling out and builders risk markets pulling out. Then it was growing like 14 to 25% a year. Now it's growing at about 4% a year. A lot of the times the perception of E&S is that it is a last resort. I wanted to put the words last resort in there because people take it and they sometimes say like, well, last resort is sort of a negative, but last resort is a placement option for your clients with hard to place risks. When they don't have a market, when you don't have a market and you're struggling, what do you do as an agent? Are you going to a wholesaler? What is that wholesaler doing? Are they finding an admitted market for you, or are they finding an excess and surplus lines market for you? Now, with Alchemy, you have direct access to an excess and surplus lines program. So if you do have that last resort client, a client who needs coverage for something that is difficult, whether it's high wildfire or high build cost or whatever it is that's triggering it to be unacceptable in the admitted market, you get extra opportunities right there for that. Again, E&S is rapidly growing, right? Largely in problematic states, California, Florida, it's very heavy on the property, but it is starting to spill into liability, commercial auto, and other specialty lines of coverage. And then again, like I said, there was a period of time where E&S was rapidly expanding, and now it's in this sort of sustainable growth mode. So it is important to point it out that while it is not growing tremendously, it continues to grow year over year as placement options because placement is so necessary for risks that fall outside of admitted appetite. Key market drivers on what might qualify for an excess and surplus lines item, right? So things that push markets towards excess and surplus are going to be your catastrophes and your climate change events. Again, my California people on the call, wildfires are a thing. They've happened and they happen, unfortunately. For my folks in the Midwest and the South, you guys experience a fair amount of tornadoes. It's almost seasonal. You've got hail as a catastrophe as well. For my Florida people and my East Coasters, we have hurricanes. Everybody has some kind of catastrophe, and those catastrophes are sometimes unpredictable, and they cause spikes in the market, spikes in losses, and increases in costs of coverage within admitted carriers. But when an admitted carrier no longer wants to take that risk, that's where E&S steps in. Other drivers would be your inflationary costs. We've talked about tariffs earlier. Obviously, the cost of goods continues to go up. We experienced it during COVID too, when material costs had spiked as well. And then, of course, what I had just mentioned before, admitted markets have to file rate and they have to prove rate with the states that they're in order to be able to get the rate that's appropriate for the risk that they're taking on. When they can't get that, sometimes they tuck tail and run. No one likes to see a carrier exit, but it happens. The E&S market is there to catch the risks that admitted market can't take or doesn't want to take. And it allows you, the agent, to give security to your client at a reasonable expense. Quick overviews again, talking admitted versus excess and surplus lines. Quick definitions for those of you who are not familiar, and I apologize. I know that Lexi put a survey out there. I didn't even read the results on it. So I'm just going to chug along really quickly with this. Admitted coverage is going to be written by carriers that have to follow state insurance laws and regulations. Rates are filed with the state, and they're strictly held to, as well as the state monitors the financial and solvency status of these carriers. Policies are backed by the state's guaranteed fund, meaning that there's an extra layer of protection in there. So a lot of times, you'll ask, well, what makes this carrier different from this carrier? On an admitted carrier, most of the time they're the same. The difference that you're looking at would be, specific coverage or specific policy language. But in terms of solvency and things, a lot of it falls in the fact that they're already filed with the state. The state is aware of their solvency status and their financial status, and they're part of the state's guarantee fund. On your excess and surplus lines, right, which is sometimes called surplus lines, is written by carriers that are not fully bound by the state's regulations or the guarantee fund's requirements. And there are different categories within this E&S space as well. So you have like resident, non-resident, alien kind of status, depending on the state and how they qualify those things. It'd be whether or not a carrier is, filed with the surplus lines division in that state, or whether they're housed somewhere else outside of the country and filed differently. And we can go over that in more detail if you want in the Q&A. But again, with the excess and surplus, it's there to provide greater flexibility in underwriting and broader appetite for coverage, basically, and allowing for high risk and specialty risk to be covered at a fair premium based on the risk exposure. All right. Now, on to the fun stuff. Alchemy's excess and surplus line solutions. Quick invite for you guys, if not familiar with Alchemy, there's a little bit of blurb about who we are here, just to kind of give you the quick turnaround. Alchemy has been around for about 13 years now. We were under the name Cornerstone Insurance Producers before. Some of you who are on this call are familiar with that. Some of you aren't. We rebranded earlier this year to Alchemy Insurance Solutions because we feel that it primarily fits with the model of who we are and the culture that we are as a business. And that is that we're a niche carrier that is looking to design programs around needs in the marketplace, solving for your pain points, while we look to transform the insurance space and the relationships within it. So a lot of the things that we offer to you may not be offered by a lot of those larger carriers out there, like what Brian said earlier, that we provide direct access to our underwriters. At any point in time, any of you can communicate directly with anyone on our underwriting team to get the answers that you need regarding your specific risks. Additionally, there is no like cut and dry. So if you're producing something, you send it over to us and it's, I'll use the underwriting term, a little hairy, like they're happy to take a look at it. They're happy to listen to the story that you tell. They're happy to, try and find a solution, a coverage option for you, for your client. And that, I think, is in a lot of ways the Alchemy difference, right? We want you to be able to enjoy ease of use, but we want you to have someone that you can reach out to get that deal across the finish line. I'm going to kick it over to Brian. I'll let him talk about program highlights. One of the things I do want to touch on, though, before I do that, we are actually, on our program, we act as broker of record for the E&S program. So you do not have to have an E&S license in your state in order to be able to place business within that program. So I wanted to give you guys a quick heads up on that. If you have questions, again, drop that in the Q&A. We'll be happy to answer it. I'm going to kick it over to Brian for a couple slides, and then I'll come back.
Sure. Thanks, Matt. I appreciate that. Good afternoon, everybody. So, when you look at our program, it's not really a whole lot different than our admitted program. So if you're familiar with the admitted program, you're going to find that a lot of this, the level or the coverages and whatnot are similar. However, the program is on ISO forms, right? So the admitted program is on AAIS forms. So that's one difference. And there's a couple different optional coverages for this, which is just name only for a couple of them. Soft cost is there, along with increased coverage for property, and then there's a couple other different options as well. So for the most part, when you look at it, it's very similar to the other program. What we are doing is expanding what we're going to allow within the program, right? So you look at the admitted programs, underwriting guidelines of what's acceptable. What's going to happen is if you're quoting through the process, you're going to get to the end of the quote, and for you, it's not going to really look any different. So at the end of the quote, though, there will be a note on there that says this is written on an admitted paper or it's written on E&S paper. So at that point, you will know that it's going to be into our E&S program. So with this program that we're going to allow up to 5 million in TIV, where the other program we're more around the 3 million TIV. That's going to expand as we grow the programs. We are looking to grow those TIVs, but we will look at things that are a little bit higher too on a exception basis from an underwriting perspective. So if it's 5 million or 6 million, don't be afraid to put it in. We'll certainly take a look at it. I think, especially on the cleaner new build risks, that's TIV is essentially the completed value, right? So when you're looking at I see a question from Robert there, but forgive me if I'm using acronyms here. So if I say anything that's out of the, no one understands, let me know. But we'll opt to 5 million straight through underwriting, refuse it, but we will look at higher TIVs. So when you're looking at subdivision, so really this really comes into play with reporting forms. I'm not sure how many reporting forms you guys have out there, but we do have some folks that have some builders that are building building a development, right? They're building out a development within an area. We'll look at higher TIVs or over 10 million if it's risk basis. So certainly I'm not going to shut it down, but from just straight through process, 10 million is typically our group for a subdivision. Again, $400 is the minimum premium. First year is fully earned. So when I say minimum premium, that's the minimum premium that we will charge. So if you have a small renovation, it's going to be $400. But if you have a $1,000 first year new construction, the $1,000 is going to be fully earned for that first year. So on the subsequent terms, those can be 1 month all the way up to 12-month extensions. So if you have a 12-month that goes longer, you can extend it up to 12 months from that perspective. And those are $400 minimum premium, but those minimum earned are the pro rata basis. So so it's the same platform. I'm going to go over some of that in a little bit. So as you're going through the process, you're quoting the builder's risk. You'll get to the end, it'll be in red, whether it's going to be on the admitted paper or E&S paper. All that means to you is just kind of a little bit more paperwork. So if it's on the E&S paper, all our diligent search effort forms are in the platform, which is very unique compared to most other carriers out there. If you have to do an E&S program or quote, you typically have to mail that paperwork in or email it into the actual carrier. Ours is all within that platform. So that's one unique thing. So on that due diligence search, you can also put ANIC, Accelerant National Insurance Carrier, as one of the admitted carriers that declined the risk. So that's one option. So you really only have to come up with 2 other carriers for that paperwork for an E&S standpoint. The other thing is, underwriters, if it's, going to fit one or the other, we're not declining everything. We don't have any automatic declines in our system anymore. So everything is going to be looked at from an underwriting perspective. You might get a decline from underwriter. That's not to say that doesn't happen. But for the most part, we have the ability to move it from admitted carrier to E&S if it fits more in the E&S program, and we can approve it straight through that process because we're going to decline it on the admitted carrier. And vice versa. If we see something that comes through to us on the E&S the platform, and we say, hey, you know what? This really is an admitted carrier risk that we want to put it over there. It makes more sense. We can move it back and forth. So we have that flexibility. Everything's done within the platform. The due diligence search is done within the platform. It's basically like a DocuSign. You go out there and you fill in your information, easy peasy, you move on, and then you bind the account. So go ahead and move to the next slide now. So what's going to put it into an E&S, right? So obviously some of the things that Matt was alluding to are some of the higher risk type scenarios, wildfire Ds, TIVs that are beyond our completed values that are beyond our admitted program, complex renovations, second story renovations. A lot of carriers are out there are not doing the second story renovations. We will do that. We will look at those and we'll most likely fall into the E&S side, but sometimes they'll fit in the admitted side as well. What I'll say here, though, is you can communicate with us. Matt said this before, but you can communicate with us through the platform. So there's an option within the platform. You can put notes in there. You can drop any documents in there. I would encourage you to put whatever documents you have within the quote flow as possible. One thing that comes to mind immediately is when you're talking about renovations, especially structural renovations, is we're going to want some sort of plans that are approved by an engineer or architect. So go ahead and drop those plans into the quote before you actually submit it over to us, and it'll get your quote turned around a lot faster. We do have the ability to send the quote back to you. You'll get an email. Don't respond to that email because it's not a managed email box. But underwriters are going to say, here, we need this extra information. Just go back to the quote, put that information, and refer it back to the underwriter. That's key. I want to make sure everybody understands that. So there's no need to respond back to the email for additional information. Put it in the quote, send it back to us, and the underwriter will get it, and we'll look at it straight away. We're getting our quotes turned around for the most part within 4 hours. So we are on it, trying to get it done for you and getting it back as quick as possible. So another thing is, risks for admitted pricing won't support it. I think some of those things, such as the wildfire Ds, right? We like it maybe, but really admitted is not going to be the best place for it. We'll approve it on E&S. A lot of the stuff that in California where we're seeing some renovations, older homes, right? So we get a lot of renovations in California that don't fit admitted program. Typically, we fall within 40 years on the admitted program. That's our standard guidelines. But we do see a lot of stuff that's older than 40 years old, right? So it's a little bit more risk there. So we will see those things go to the E&S program, and we'll definitely look at those from the E&S standpoint. Certain cat exposed projects, think about, some of the Hurricane Ds, which is the bullet point below, the wildfire stuff. We'll look at some of the, really those are the two biggest ones from a cat exposure standpoint, is the wildfire and the hurricane stuff. But we'll look at those, and we won't just say no. We'll look at it and say, how can we make it fit? How can we make it work for the agent? And making sure that we can find a way to get it priced appropriately, but also get an approval back in your court. Because our goal is to help you guys write business. All right, you can move on to the next slide. All right, so agent benefits. So you got one system, one underwriting route to the right program, right? So it's easy if you doing business. You go through the quote flow. The quote is going to determine which path it's going to go to. For the most part, like I said, underwriters have the discussion or the discretion on where to go back and forth. But it'll tell you at the end, this is presented on admitted paper or it's presented E&S paper. The same Alchemy team handles it, so it's the same group. It's not going to anybody else. It's everybody under me. I have a few underwriters under me that are going to be managing those quotes. So we have a robust team that's going to get those out as quick as possible. Again, we're not declining anything, right? Automatically out the gate. So everything's going to be looked at from an underwriting perspective if it's referred to us, right? So once you refer to it, we're going to look at it. So we don't have any automatic declines in the system. So you're not going to get that anymore. We had some of those before the E&S program, but now we took those out and we're going to try to look at it from the E&S standpoint and how we can write it. Want to be flexible. We've made a lot of accommodations for agents, trying to figure out a way to make it work. That's part of what Matt was talking about before. Have open communication with us. You certainly reach out to the sales team as well, but you can reach out to us and try to figure out a way to make it work. Give us more details on the risk, make it more appetizing, and we'll certainly try to figure it out with you. Diligent search effort is done in the platform. I mentioned this before. You don't have to go outside, no extra paperwork. You don't have to email us anything. You can DocuSign it right in, fill in the other searches that you've done, the other declines. Again, ANIC is one of the declines. If you get to that point, Accelerant National Insurance Company, you can put that right on the diligent search effort paperwork. That's an option. So you really don't have to come up with two more searches. I see a question about GL. We do have premise liability that will be coming soon, but it's not in there yet. So I think probably end of the fourth quarter we'll have premise liability. It's not necessarily a general liability, but it's premise liability that offers a solution to some of those builders that want that for that risk. And that helps the builders out a lot because they don't necessarily want liability under their main liability coverage. They want it right on that premise. So, yeah, I don't know if I think there's another slide, Matt. Is that it? Yeah. So that's really it from the presentation. I think that's how you get appointed. We also
I
have
appreciate that,
Q&A.
Brian.
Yeah, go ahead, Matt.
Yeah, no, happy to take it over. So, I'm not sure if we talked about this or stressed it enough, but realistically, we have one platform essentially that you'll be quoting in for the admitted program within all 50 states. And if it doesn't fit in there, like Brian had mentioned earlier, the underwriters can switch it back and forth to excess and surplus or admitted if it belongs in one versus the other. So there's no need for duplicate quotes or quoting in multiple platforms. The other things I do want to bring up for those of you on this call who are appointed and those of you who aren't, already appointed with us, we do have a coastal program as well that will be moving into this platform. It is currently on our legacy platform. It has different limits and different guidelines. It's also an admitted program. It exists within Florida and Texas. It does write higher TIVs. It does write with wind, and it does write all the way to the water. So if you are located and licensed in those states, Florida and Texas, make sure you let us know if you're not already appointed with us. If you are appointed with us and you have questions about that program, feel free to let us know as well. We'd be more than happy to be able to go over that in more detail with you. I know I'm trying to set up more kind of training sessions, more program understanding sessions as well in the future. If you're not already appointed with us, you can use the QR code here to get appointed. It'll take you over to our producer application. You can go ahead and complete the producer application. That will start the process. Getting you appointed is fairly quick and easy. So if you've got any risks in your pipeline now that you want to be able to quote, we can get you up and running within a couple of days. No fuss, no muss kind of stuff. So I definitely want to leave this here, give you guys the opportunity to go ahead if you're not already appointed with us to explore the Alchemy difference and really get a feel for what it is that we can and we can't. It's also a pretty good slide to talk about some of the other programs that we offer as well. On the general liability side, and this is for my Florida folks only at the moment, we do have an artisan contractor general liability program. That program is rapidly expanding. It's looking into adding new class codes. It is really designed for your subcontractor types. So you've got your landscapers, your pool cleaners, your HVAC guys. We're adding, I think, a paver class code. We will do painters. We're adding a couple of other codes as well in the next couple months. So in November, we'll start to add more to that. Again, Florida only on the artisan contractor program for now until we begin to expand that outward. But if you are in Florida and you don't already have access or you need access to it, please let us know. If you have questions on it and you want to know more details on it, we'll be happy to go over that in more detail as well. The other program that we do currently have across 49 of the 50 states is our cannabis program. So if anybody on here is familiar with cannabis insurance and the difficulties and nuances of placing cannabis insurance, we have a phenomenal program for cannabis insurance for 49 states. Currently, the only state I think we cannot write in is Hawaii. And we will have future webinars to talk about that. We have fact sheets that we can go over that in detail for you as well, and basically cover everything from the growth phase all the way to the final sale of the product. So if you have interest in that, please feel free to reach out to us. We're more than happy to give you information, put you in touch with the underwriters directly involved in that program, so they can go ahead and facilitate any placement of risks that you might have. Again, your appointment with us can cover any of the programs that we offer. Other exciting news, right? We are working on a commercial habitational and non-commercial habitational program that is going to be available in 17 states. It'll be admitted in 2, which would be Florida and Texas. And the remainder will be in there as an excess and surplus lines offering that's currently filed and in development. So we should have that. I don't know. I'm always reluctant to put a time on there, but reluctantly say Q1 of next year. Of course, we will announce that with bells and whistles on our monthly webinars as well, and we'll keep you guys posted on those changes. Brian, are there any other programs that you want to talk about while we're on this webinar before we jump into Q&A?
Yeah, just for expanding the builder's risk program. I'm not sure how much you talked about it, Matt. I was answering a question there, but we are coming down the line with quota share eventually, so we will be able to do higher TIVs. We are appointed with Lloyd's. We're just setting that up right now. So right now 5 million is kind of where our sweet spot is. we're looking to be able to go up to 10 to 20, 30 million here down the road with some quota share options. So keep, look for that. It's not coming out right away, but probably first quarter, second quarter next year.
Excellent. Thanks, Brian. I appreciate that. Guys, I'll go ahead and move things over to Q&A. I see you guys chatting away in the chat and in the Q&A, and I appreciate all of the engagement. This is fantastic. If you do want to ask a question in the live Q&A, feel free to go ahead and raise your hand. I will try to unmute you. Truth be told, I'm not the best at tech when it comes to this, but I will try my best, and if not, we can do it through the Q&A channel. All right, I'm not seeing much in the way of hands raising. I know that my guys have been really good at answering the questions in the background, so that's good. We'll continue to ask them and answer things in the chat. I appreciate all of the engagement. Another fun thing for you guys, all right, and I'm throwing this out there random because I just happen to be wearing my super slick Alchemy like truckers hat today. For you guys on the webinar, I'm feeling a little frisky. The first one of you to place a risk with the excess and surplus lines program, I will send you one of these Alchemy hats. So if you've got something in the pipeline, if you've already got something in the works that you already submitted to us, if you aren't appointed yet, get appointed. Let's get you set up with one of these sweet hats, okay? So I appreciate it. If you guys want to learn more about Alchemy, about our offerings, about things that we're doing, feel free to follow us on social media. Go ahead and give our LinkedIn page a follow. You'll see future invites for these webinars. You'll see all kinds of other offerings that we'll put out there. You'll learn more about the industries that we play in with our verticals. And we're really just trying to, like I said, educate as much as possible within the space, as well as help you to build your business into a larger, more profitable business, because we do well when you guys do well. So thank you guys. I appreciate your attendance today. I know there's a few more questions in the chat here. We will get those answered. If you have more, throw them in there. And if not, I appreciate all of your time today. And please come back, see us on future webinars. If you have questions, please reach out to us. We're more than happy to help on any of those. Joseph, did you have a question? Joseph, if
I'm muted.
there you
Yeah, I
are.
had a
Now you're not
question.
muted anymore.
Oh,
Sure.
there
What
I
kind of
am.
question you
Yeah,
have?
yeah. So I keep on getting a information requested response from you guys regarding the name of the general contractor.
Okay.
Yes.
And I was wondering like what information you guys were looking for. And like sometimes like these investors, sometimes are doing like 100K of work, sometimes you're doing 20K. So some of them are not sure if they're going to want to use a licensed contractor or if they could just do it themselves, if it's but they still need the builder's risk for the loan. So what is what are you guys looking for? And like sometimes they don't know exactly who they're going to be using until they buy the purchase of the property. So what would you recommend I do in those situations?
Yeah, honestly, at that point, we're not going to approve it without understanding who is doing the construction, right? In some scenarios where it is the owner doing it, if they have a history of doing that type of work, say it's a remodel, fix and flip type stuff, and they've done a bunch in the past, you can submit a resume of what they've done. But for the most part, if it's a larger risk, we're probably not going to approve it till you know exactly who that contractor is going to be. I mean, but the quote generally is an indication. I'm sorry, go ahead.
No, go ahead.
I said the quote is generally an indication, but it won't be approved without that builder or contractor. It's got to be a general contractor that's managing the program.
Okay, and then what information do you need? Do you need like a license number or just the name of the company?
Well, a license number would be great, but we do our own due diligence and research in that contractor as well. But if we can't verify that contract, then we're typically going to decline it or
Okay.
ask for more information.
Brian, did you also
Makes
let them
sense.
know that we would take situations where there's applicable experience as well?
Yes, that's where they would have to provide a resume. So if the builder or the owner's doing it, and they've done these in the past, provide us a resume of some of the projects they've done in the past. Someone's asking about being appointed. I thought you just
Yep, I'm on it.
got it. I see another question from, I can't see the name here. Starts with TS. Oh, I lost it. Tasha?
Yeah, Tasha, I went ahead and unmuted you. You can go ahead and ask your question.
She's still muted, looks like.
I think she
Okay,
has to
there we go.
unmute on her
All
thing.
right,
There you
I
go.
gotcha. Yeah, it's like a double mute situation.
So my question was actually kind of along the lines of the other one. I deal with a lot of investors, and typically, so they may not be licensed, but it is what they do. So you kind of
Mhm.
answered it already. I need to submit just something showing the previous projects.
Yeah.
Is that right? Okay.
Yeah, just
And so-
showing a history that they've been able to manage and do these projects historically, right? That's really what we're looking for, that they know what they're doing, essentially.
I was gonna say
Gotcha.
I can give real life examples. So my brother-in-law is an investor. He fixes and flips houses, and he's been doing it for I don't know 8 or 10 years already. But he tends to do work himself. So oftentimes, if he's putting in a submission, the submission goes in, and he attaches a resume of the projects that he's done. Which is basically just simply a list of all of the projects that he has managed from start to finish over the years, and underwriting reviews that and can move forward with that in the event that he doesn't have like his actual GC.
Okay, we'll do then. So just a list of the projects,
Yep.
maybe just a small scope of work and the dates, something like that.
Yeah, I mean something like that would be perfect, especially if they're doing like mostly remodeling. I think that would be acceptable. Obviously, Brian is the expert on that, so I will default if he thinks that's not correct. But
Yeah, no, I think that's appropriate. I think they get into we want to be able to see that they've done that kind of work. For example, I had a gentleman that was a builder. He called himself a builder, but really he did a lot of punch lists and a lot of these developments for some big contractors, and then all of a sudden he was going to do a GC of $1 million project. That's a big jump, right? From doing punch lists, correction work to actually now going to start building $1 million homes. So we didn't approve that one, but just kind of give you an idea of what we're looking for, that they can actually do that work. They've done it in the past and they have a track record of doing it.
Okay, thank you.
Yep.
all right, you guys have been really communicative, and I appreciate that. We're working through everything that's come in. I think we've got most of the questions taken care of. It looks like Tasha has a question, perhaps. So
Yep.
let me go ahead and.
I got it. I already unmuted.
Oh, I was gonna say, I'm like perfect. What you got?
So, I like I said, I deal with a lot of investors who are doing like fix and flips, and sometimes the lender requires a replacement cost. And I had asked a question earlier that so the existing building is going to be ACV and the renovations will be replacement costs. So as far as on I guess the declarations page or just some documentation, I'm trying to think of how will it be listed on the documentation for the lender to know that there is some replacement cost available.
Yeah, it listed on the deck page, but also in the policy language. If you went to the actual coverage form, it discusses it there as well. But
Okay.
it is listed on the deck page.
It's listed on the deck page as ACV or replacement cost.
Both, depending on what which one it is. So all new homes are all replacement costs. Existing remodels, the existing structure is listed as ACV, and the remodel portion is listed as replacement costs.
Okay.
Brian, do you maybe have an answer for this one that's asked in the chat? It's regarding whether or not we'll do builder's risk on building consultants or industrial hygienists. It was asked by Heath Bloomberg.
Are we talking, I saw that and I was kind of confused, not sure exactly what the question is there. So building those types of structures, I guess is.
That's what I was trying to figure out also. I don't know if Heath is still on the call. He is. Awesome. Heath, I'm going to unmute you so you can give us some background so that we can actually properly answer your question for you. You just got to unmute your mic. I allowed permission for you for now.
Hi, thank you. Good class. My question was, I mean, if you have what we do builder, we're consultants for builders risk, but when you have properties that have, let's say, damage to them, or let's say something's built and there's mold in the walls that you didn't know, would you guys hire the building consulting or an industrial hygienist? Is that something you guys handle?
No,
You're
we
talking
don't
on a
do that.
claims basis, or you're talking on
Yeah,
coverage
at a
basis?
claim, like
On a
there's
claim.
a building, industrial building. Go ahead, Brian.
So let me just two things, right? So first, we don't typically do builder's risk on commercial renovations. That's one thing, right? We sometimes will do new construction. Think things like car washes or pretty vanilla stuff. So it kind of takes it out of that bucket already a little bit, Heath, if you're doing coverage on something like that. Now, from a claims perspective, we're just insuring. We're not doing any of the processing and things like that outside of if there is a claim on one of our risks that we cover, we have our TPAs and whatnot that handle that.
Okay, that makes sense.
Okay.
Thank you.
Yep.
Brian, do you remember off the top of your head for commercial HAB if we're doing New York, New Jersey? Because Adam had asked that question.
Commercial HAB, we are not doing New York. We are doing New Jersey. We're doing everything from Texas all the way up to Maine except for New York.
Okay. I appreciate the clarification on that. I think that's helpful. So excellent. I think we've gotten everyone.
That's going to be condo, apartments, and non-residential commercial is what that's going to be. And all the way up to 30 million on that.
Excellent. Thank you, Brian. I appreciate you clarifying. Does anybody else have any questions whatsoever that we haven't maybe addressed? If not, I'm going to let you guys go about and enjoy your day. I know a bunch of you already kind of dropped off. I don't want to take up, the whole hour if I can help it. I'd like to get you, in there and quoting and in getting on with your day and selling some policies. So. All right. Seems like we're good. Lexi did drop it in the chat, the connect@alchemyins.com email address. If you guys do have general questions, please feel free to drop them there, and Lexi will route them to the correct party to get those answers for you if she doesn't have the answers herself. Again, thank you guys for attending. I appreciate that. It was tremendous of you guys to come out and spend your day with us. We're looking forward to continued successes for everyone. And if you, like I said, have questions, feel free to reach out to us. Thank you guys. Enjoy your day. We appreciate you joining us on our monthly webinar series.